What's going on, guys? Welcome back to my YouTube channel. Hopefully you are doing fantastic. Today we had a price action that really was unusual and fairly odd and really not a good lesson to learn from today. You can see the prices just acted really weird. Nevertheless, let's start with the how you should day trade properly. Before I start day trading, I like to identify the current market structure to see what the market is doing, where the prices are most likely heading. And the first thing, we started with the downtrend. We have a break and a new low. This is how I drew this short-term trend line. After a break of a trend line, there's most likely going to be a retest of a new extreme. This is the trend line rule, price action rule. Two legs to a new extreme. So from this point on, I'm considering this downtrend played out, and I'm looking for longs. Not necessarily longs yet, excuse me. I'm looking for correction. And you can see the correction was fairly big, and it ended up being a big reversal at the end. But this is still in the pre-market open session, so really there's no really trade yet. It's way too early. But from this point on, market is looking like we're going to be in a trading range. It didn't really end up happening, but the beginning of the day is looking like we're in a trading range, really kind of swinging up and down through the EMA. Once we made this swing right here, this is where I set the trend line. You can see it's fairly fitting. You can see it ended up fitting even later on in the day. We have a new low right here. Pull back, first entry short, pull back. We push through the EMA. So from this point on, since we set the trend line up and we push through the EMA high like this is the point where I was starting to look to go for longs. Right here when we made it through the EMA and the second entry short that failed. This is a two failed attempts, very close to being a reverse pattern. Two failed attempts by the bears to try to take the market lower, but we are now way above the EMA. We are inside of this trend channel. We are coming off the lows. This downtrend is already over, so there's reasons to be looking for long. I don't like this setup that much because we are still away from the EMA, so this is not ideal. Nevertheless, it is a failed second entry short that is according to our rules. I like this setup much better. This is another pullback. Nice bullish reversal bar. Now we are at the EMA and at the trend line. This is a third touch, definitely confirming the trend line. EMA and trend line are congruent, so I think this is much better setup. We are touching the both key entry points. It is just a first entry, but since the EMA and trend line are congruent, I like this really a lot, and we are now in an uptrend, or we are going higher. The only thing here, you have to be careful to pay attention to these highs, to this resistance. So make sure you drop your limit order a little bit further back so you got enough room before these highs, and you will be safe because you don't want to risk going long into the highs. But still, the major high of the day is here, so you don't have to pay that much attention to these highs, but they're there, so just be safe and put your limit order a little bit further back. And you can see prices are creeping up higher, and here is a textbook setup according to our price action rules. And there's always one or two trades, sometimes even more, depends on the volatility. They are perfect cookie cutter according to our price action rules. We have a first break of this uptrend working up higher. So what's most likely going to happen? We're most likely going to be looking for a new extreme. We have this downtrend working up lower. We have a break and a new low. So this downtrend, this correction bearish is over with the break and a new low. First entry long, second entry long, nice bullish bar. EMA is holding prices. All of our criteria to go long according to our rules are being met here. So this is very beginner friendly setup. If you didn't do anything today and you just took this one trade, you did good, because then after this trade there was a quite a period where there was really not a good setup, and we have a break and a new high. So I drew the short-term trend line. We have a break and a new low, but it's still too early to go short, and you don't want to go long yet either, because this is what you already have a break and a new high. So you don't want to go short yet, but you don't want to go long either. And I was very caught off guard by this move that happened out of nowhere. And you have a new high right here, first entry long, second entry long, but you're way far away from EMA. And then you have a third entry long, and that's not really a setup. And plus, you definitely have if this is not enough new high for a lot of traders, you definitely have a break and a new high now. So I don't think you really want to go long. And here's the part when it was really tempting to go short. We have a second entry long right here, nice bullish bar. EMA is holding prices, second entry long. But notice how these highs are starting to form, and there's a resistance starting to form. So even as tempting as this was really tempting, and this trade was tempting as well. And it is kind of similar to pattern we had yesterday. You can see you can see the EMA is holding prices, and you have this one push higher, pull back lower, and once again it made the one more push higher. So very similar to this pattern, this push higher, pull back, EMA is holding, and once again the last push higher. So these two trades were very tempting, but I stayed away from those, and I think I did the right thing, because you cannot ignore the resistance forming big time. And this is the place where a lot of beginners can get trapped very easily, because they miss all these moves going long right here. When it's unclear right here that we're gonna go long. I mean, you know, it's clear to us because we're following price action, but to a lot of people who really don't know what they're doing, it's not that clear. But after such a gigantic move, now they think they're gonna go long, and they're going long at the very highs of the day, at the resistance, and you're much safer going short here. But nevertheless, if you got sucked into the trade going long here, you got lucky and you survived and you scalped out. That's the great thing about being a scalper. You can, you know, be wrong and still get your scalp. But you have to pay attention, because this uptrend should have been over, and now this was some sort of last push. They probably needed to trap a little bit more bulls. And so as tempting as this was, as EMA is holding prices as it is, you're going long at the resistance, and this is a trap. This is how you recognize a trap. A perfect second entry long at the very high of the move. You know you're probably way too late after all this entire move. So they just try to trap more people here, and you have a double top right here. You have a failed break higher, and notice how this is a reversal pattern. Notice how you push through the EMA like it's not even there. You have a first entry short, and this is still part of the first entry, but it's very close to being a second entry. If you go on a smaller time frame a little bit, you would see a legit second entry short, first entry short, and you can see the bullish bar going higher. If we trigger just one tick higher and then turn down, this would be a legit second entry short. But I still like the trade because EMA is holding prices twice. It looks like a reversal pattern, and it's very close being a second entry. It is technically just a first entry, or depends how you count the double bottom, because when you have a double bottom, you can count it both ways. You can count first entry short, second entry short, or you can start from this low as a first entry. And this is what I normally like to do. I count double bottom as one low normally, so this would be just first entry. But there is room for counting it the other way in the market, which we're going to talk about. But this looks like a reverse pattern. You're coming off the highs, fell break higher, they just trap a little bit more bulls, and they rail up higher. And you can see how they trap the bulls, fell breakout, and they're going lower. They're giving you signs that market is going to go probably lower. They trap all the people here, and now you have to switch gears and follow the institutions and go short with them. They just gave you the nice chance, nice pullback to go short here. And that's it for the day. It's once again fairly uneventful day. Very, quite slow, odd price action. Nothing really much happening. Just once again, draw the short-term trend lines. If anything, draw the trend lines. Just try to wait for the perfect setups. This was the perfect setup for the day, and you'll do good. Unfortunately, it comes with the territory. Not every day is going to be fun and exciting. And today is one of those days that you just have to get through this. But I think it's not that hard. You cannot make that many mistakes. If you're just trying to go long, stick with the trend. Just don't pick the tops here. I don't know why would you. There's nothing really telling you to pick tops here. And even if you went long here, you just got lucky. You survived. You still scalped out. So fairly merciful day overall. But I'm a little bit disappointed that we don't really get to learn much from today. There's really not much of a learning opportunity. But unfortunately that happens sometimes. So I hope you liked the video, you enjoyed it, and I'm gonna see you guys in the next one. Have a safe weekend.